Okay, well, we're a few minutes away from the CPI report. It is Wednesday, September 18th, 2023. It is 8:22 in the a.m. Eastern. We're about 8 minutes away. And today we're going to be looking at the CPI numbers for August. Looking over Forbes, what they're expecting, there's a few things. A lot of contradicting reports. A lot of people looking at a lot of contradicting reports. Cleveland Fed calling for a sharp spike in August CPI, month-on-month inflation. So just again, what is CPI there for? Consumer Price Index gives us an indication on inflation. That's all it is. Are prices going up? Are they staying the same? Are they coming down? This is a key indicator that the Fed uses in order to gauge whether or not they need to increase interest rates. And if they increase interest rates, that of course affects the entire economy as a whole. So the report coming out today obviously has a little bit of weight behind it on Fed decision making. What is the Fed waiting for or watching for? Yeah, so, well, home prices, number one, I would say. And of course, wage growth. But this ties into non-farm payroll. You can take a look and see what wage growth has looked like the month prior to that. So CPI and non-farm payroll really do live hand in hand when it comes to Fed interest rate decisions. Should be pretty interesting. We're going to be looking also at the reports as they come out live. You can see they're waiting for CPI data right here as well. I'm also going to open up some charts. Let's do some charting. See how the price movement is affected because of it. So let's do BTC USD chart. I want to do something a little bit more up to date. Let's do this. See on super charts. All right, we're going to trading view super charts. Now I have super charts. We're going to go with candles. And what is this? This is a daily. We're going to shoot this down to a 5-minute. There we go. All right, let's see how the market's going to start moving today. So we got BTC USD. It's been, let's see here, in the last 2 weeks, it's been pretty flat overall. All right, we're going to go ahead and duplicate this, but instead of it being BTC USD, we are going to select, a FX cross. We're going to go with Euro USD. And we're going to see what that looks like. Euro dollar is at 1072. When was the last time it was at parity? It's been a while since parity. We're close to it again. All right. So any US-based report, you're going to see movement happening in USD. Obviously, that's the underlying currency here in the US. If this report was coming out, hypothetically, I don't know, in the UK, then, you'd be looking at British pound and, etc. So this is going to be interesting with everything that's going on, with the Fed kind of screaming that they might be increasing more rates, whereby everybody's kind of like losing their shit about this. Everybody wants to see rates start to come down. It's been affecting everything. And yeah, Powell and the Fed seem to be pretty adamant about kiboshing any kind of inflation over 2%. I think 2% is their target rate. So they want to basically kibosh anything over 2%. And okay, I get it. A lot of people do get it, but clearly it is very frustrating. It just means that buying or taking a mortgage is going to be a lot more expensive. Everything is more expensive when it comes to liquidity. So what does the Fed try to do? They try to increase interest rates so that money becomes more scarce, so that people stop spending as much, and you just have that trickle-down effect. I'm not going to pretend that I can lecture people on the A to Z on inflation and how that works. I'm just really curious to see what those numbers look like when they come out, and when they do, how it's going to affect what we're seeing here, euro dollar and BTC USD. You'll notice one thing which is interesting. They both Bitcoin and euro dollar, they're quoted in dollars, obviously, but this one represents Bitcoin, the other one represents euro. The base is always different. So I keep these two open simply because euro dollar is probably the most volatile of the USD attached FX crosses. Maybe pound, maybe Great British pound. I don't know. It's been a while since I did FX trading. And of course, I'm in crypto, so we do BTC USD. We want to take a look and see what that's going to look like. Let me see what the numbers are expected. CPI. Saw that consumer price schedule. Only got 2 more minutes left. Okay, there we go. What are we looking at? Core CPI excluding food and energy. So that's what core CPI is versus regular CPI. Real quick. So core excludes food, energy, pricing. CPI as a whole, just it's an aggregate. So it could show a 0.38 increase in month-to-month prices. And yeah, that would be an uptick. So we're actually looking for a downtick. A downtick would just add more confidence, and the Fed would be more inclined to take a step back. So let's see what we're doing. All right, here it comes. You can see already some movement happening. Why is this? Reload. Whoa! Look what happened with Bitcoin in the last 5 minutes. Yeah, so that number wasn't really great. Let's also pull up some. Let's pull up the euro dollar as well. See what's going on with that. Should be following the same suit. Yeah, look at that. Look at that. Look at that massive candle. So it's down probably about 200 pips so far. Still going. Yeah, it's not good news. That is not good news. Kill this. Yeah, so the 26, that's about down 200. Okay, so the numbers didn't come out as good as they hoped, but wasn't that far off. Let's see here. It rises 3.7 year over year. The estimate was 3.6. So it's not that far off. Right? Yeah. But still, it was higher than expected. So the question then is, all right, what's happening today then? So was all this volatility that we just saw here on BTC USD and Eurodollar, was this just some volatility shaking off some pending orders, limits, people holding on to stuff that they shouldn't be? We'll find out. We'll find out in the next 3 minutes or so. So generally speaking, people that like to trade the news, they'll do it on a 5-minute candle chart like this one. They'll wait for the report to come out. They'll take a look at it. They'll say, okay, well, now there's a lot of volatility. I'm not going to jump in. Instead, I'm going to wait for the first 5-minute candle to kind of like get out of the way, let the dust settle. And then based on whatever that candle was doing, I'm going to go ahead and take a position. That's how some traders traded. Some will just load up limit orders in advance and see if they hit, if they trip. In this case, there was a lot of volatility happening, so there's a very, very strong chance that your limit orders would have tripped. And now you see it's already going to the opposite side now. Another reason why people wait those first 5 minutes, because that first 5-minute candle is pretty volatile. It jumps around a lot after the news comes out. You have buyers and sellers all jumping in, trying to do stuff at the same time. So it is a good idea to kind of wait until your first 5 is out of the way. August consumer prices increased also 0.6 month-to-month. Estimate was 0.6. So that wasn't horrible news. Core consumer prices, so we said a rise of 0.3 over 0.2. Okay, so that kind of like aligned. And we see now it went a completely different direction. But that's FX. When it comes to foreign exchange, it does that a lot. It's not moving. 2617, 26. Yeah. Cool stuff, right? Well, anyway, this is what happened today. Let's see what let's just open up economic calendar and see what else we got going on this month. So this was today. We can see all the reports that are coming out from Great Britain, EU, Japan, Australia. All right, so Thursday, anything happening of interest on Thursday? Let's see here. Interest rate decision. There we go, ECB. Okay. So that's going to be a big decision report tomorrow, whether or not ECB is going to be going to be increasing, decreasing, keeping interest rates the same. That'll happen tomorrow. Retail sales and PPI, that'll also be out tomorrow, 15 minutes after the ECB. But I think the ECB is probably going to move the market more than the US PPI report. Keep going. What do we have here? Business confidence, industrial production, that's in China. Anything on Friday? Inflation from Italy, inflation rate from France. So there's some interesting reports coming out Friday also regarding inflation data. ECB. Yeah, so it behooves us to actually look at the calendar and understand week over week what kind of new things are coming out, and then based on that, kind of figure out, okay, what am I going to implement strategy wise? Am I going to stay out this week? Am I going to stay in? Am I going to go flat? Am I going to just store up enough dry powder for when the moment's right? Yeah, who knows? Everybody puts their own strategies together, however it suits them. But yeah, so I'm gonna kill this. This is I wouldn't say uneventful, but I would say pretty much in alignment with what kind of people were expected. You know, a little bit of noise right at the start, but looks like it's not really doing what could have happened. It could have completely pushed everything down and continue to push things down. But I think everybody is already priced in that Fed will not be increasing rates this year. And if anything, they will be decreasing rates next year. I think the majority of traders have already priced that in. So we'll see. All right. Well, more things to come, guys. Stay tuned. We'll see what the reports on Friday look like, and looking forward to all those other reports coming out from the EU, Great Britain, Japan, etc. Should be very interesting to track and see where we go with all this inflation data. So till next time.